Greeting from Alberta, Canada. I hope everyone is doing well. Welcome to another episode of RM Smart Investing. This market analysis is for November 2nd, 2024. Well, we have a big week ahead, so there's a lot to cover. Although this will be a kind of a short version, we will not have three segments. It all will be in one segment because of, again, I don't have access to all the tools that I need. So we will have a shorter version, but that doesn't mean that we won't cover a lot of things. So this week, well, there are two huge events coming up. Of course, on Tuesday, we have the US elections, which is obviously the presidential election, a majority of the Senate seats, and a full House. And then right after that, 2 days later, we will have our FOMC meeting. Fed is going to meet, and well, the markets and everyone thinks we're guaranteed that it will be a 25 basis point reduction. But of course, we want to hear the language. Last week, we had a non-farm payroll, which actually moved the markets, and which brings me to this. Well, it is bond, treasury bond. Everything is about the notes and bonds, and not only in the United States, but actually globally. We look at from gilt in the United Kingdom to Germany's bonds and all that, what is happening with their interest rates, which affects their currencies. So it is all about what's going to happen with interest rates, what the bonds are telling us. So we will discuss that. And then, speaking of that, we want to see what is the S&P's volatility and expected move are telling us about next week's election. It's interesting that we probably could see a little clarity of what the markets are thinking about the election. Of course, last week was probably the most important of the earnings week. We had again, a majority of our Magnificent Seven reported their earnings, but we are not done with earnings. There's still some more coming, which we will also cover that. I've been talking about this expected move for last 6 weeks. I hope you've been using butterfly option strategy. It has been working, and this week was not an exception. So this is interesting. So I hope you pay attention to that. The other thing from the technical side of things, well, how about the 50-day moving average if you're a technician? So we will also see what's happening with that. The last but not least, of course, we are beginning of November. So obviously last week we had end of October. So we always like to review the month's performance in different assets and stocks. So we will review that. Having said that, let's see what happened. What was the major news last week? Well, everybody was anxiously waiting for the employment numbers. So on Friday morning, non-farm payroll came, and the expectation was about 120,000. Actually, it was about 100 to 120,000. And what was the number? Only 12,000, which actually, as we shall see, it shocked the markets initially, but what happened was the bond market reacted more so than equities. And the reason was, of course, we had our two hurricanes and we had the Boeing strike, and that was really was in the play. And it was kind of very surprising that it was a lot less than, not only for this previous month, but also adjustments for August and September. Those numbers were reduced by 112,000. So, which meant that employment is not as strong. And again, we reviewed the bond market and we'll see what happened. And also unemployment went to 4.1. Last year we were at about 3.6. So it stayed at 4.1 the way it was the previous month, and it was as expected. Average earning, on the other hand, was up a little bit from expected 34.2 to 34.3, which is in line what it was the previous month. Next week, as I mentioned, all the eyes are in election, but also on Thursday, which is one day later than usual, just because, again, Tuesday is an election. So the Fed FOMC is going to meet Wednesday and Thursday. So we will have the results of what they have to decide. As you can see, the expectation is a 0.25% reduction in rates. On Friday, we also have our preliminary units of Michigan consumer sentiment and inflation expectations. So look at what's happening. Again, we are looking UK gilt, we look at German bonds, and of course, US 10-year. We see this big move. The spread that has a steepening. We are at 0.16 2-year, 10-year spread. So that has been happening, and we will go a little more in details with the bonds in regards to that. So what kind of a week did we have? Remember, we had a 6 weeks of positive numbers on indices, but last week we mentioned, well, if we really odds are that it's going to be 50-50, and the markets were down. And then this week also, it's the second week we are down. The Dow was basically flat, but NASDAQ was down 1.5% and S&P was down 1.37%. Of course, we had the earnings from Microsoft and Meta, and the outlook was not positive, specifically about AI spending. And there is a little question marks, and we want to watch NVIDIA. There is question marks of all the companies. Really, NVIDIA is the only one who's really making a lot of money. So there's a little cautiousness about other companies and their AI spending. A lot of investors are getting a little impatient, in my opinion. So that was one of the reasons. Amazon with their cloud, they had positive, and they were up nicely. Apple, Microsoft, Meta got hit. Google was up. But as a whole, we can see the markets were down. Gold basically flat, has hit the all-time high, and the same thing. Crude oil was down, but copper was also a little flat. So as a whole, again, the markets were down 1.16%, although the small cap were actually positive, and we can see even the mid caps were okay. So, but it was just really mega caps that they were affected. When we look at all the sectors, I mean the major indices, as you can see, what is happening with from the Dow Jones and the S&P and NASDAQ. I want to pay attention to this 50-day moving average. We have broken below the 20-day moving average in all the major indices, as you can see. But as far as the 50-day is offering support, we see what is happening with the Dow Jones Industrial. We break actually below, and then we just snuck up above that 50-day moving average. Now, it's been quite some time since the beginning of September since NASDAQ was actually below that 50-day moving average. So when we look at even Wilshire 5000, we are right on 50-day moving average. But then look at the 10-year yield. This is just continuing. The dollar continues to be strong, and gold had a little profit taking. It has gone up. We're still above the 20-day and 50-day moving average. As far as sectors, we see there was still a strength. We look at discretionary, we look at communications, technology, as we talked about the NASDAQ. We just stopped right on that 50-day moving average. We look at industrial right on the 50-day moving average, but the materials actually broke below the 50. Last week we talked about they broke below the 20-day moving average. We see energy right below the 50-day moving average. We look at staples. Actually, what is happening, this is a death cross. The 20 has broken below the 50-day moving average, and we are way below. The same thing with the healthcare. And then we see the utilities finally, actually, they have broken. They are really have been going up mostly again because of the AI. And then the financials right on that 20-day moving average, but the real estate has broken and we have a dead cross, 20s crossing the 50-day. Also internationally, again, we see quite a few markets below their 20 and 50-day moving average. So again, the strength of the dollar is big. The world is watching the elections in the United States. So we see not many markets are strong globally at this time in the short run. So let's talk about the sentiment. As we talked about last week with the AAII, we had right around the average, but this week there was a little bullishness on Wednesday. Finally, the hope is we will put the election behind us, but also bearishness just a little bit snuck out, and we are right on the average in the bears, a little better than average in the bulls. And we also, a couple of weeks ago, we were at extreme greed. So as you know, when we get to that extreme greed, generally markets become in a corrective mode. And we went to greed last week, and now we are in neutral. On the other hand, we have the Citigroup panic, which had been in the neutral zone, is coming to the blue zone, which is the euphoria, and we are at 0.42. So let's, again, these are going to be brief charts of what we have. Last week, we talked about the Fibonacci extension, and we talked about we have hit that top. If we break above that, but then we will continue, we could get to the 6,000. But well, it proved to be the resistance. And where are we now? Basically, we are right on that 50-day moving average. We hit again a couple of times that resistance. So we'll see. Next week is going to be crucial. Even on the other hand, when we look at from the linear regression, we did go right on that -2 standard deviation. You can see the momentum had been diminishing. We've had the dark blue, we've been going down. And also in the long term, the C wave had been losing its momentum. But we are right now right on the standard deviation. The question is next week, we'll see what happens. Again, there's a lot of question marks Monday, Tuesday, Wednesday, Thursday. So we are under the 20-day. The question will be, would the linear regression slope change, flatten, or will we have a bounce and break back above that 20-day moving average? So this is what I'm looking at from the options point of view, what is happening with SPX options. And as you know, we have the daily numbers. So basically, I want to follow this with me. As you can see for Monday and Tuesday, we see that, well, the volatility at 12.5 and 14. And of course, now Wednesday comes and we are at 23, 25.6, 25.89. So this is what I want to pay attention to. On Friday, we actually have the plateau in our volatility. And what the markets are telling us, we are having a reduction on Monday to 23.37, 23.69. It stays around the 24. So at least my interpretation is the market believes that the election will be settled and we will know who is the president and they don't believe that it's going to be that close, that it's going to go on for weeks and weeks. So this is, again, my interpretation. This is what the market telling us. So they believe that there would be that clarity and certainty. So that's, again, what I see in the markets. Going to NASDAQ, again, we almost had a double top in NASDAQ. We had gone back and tried to break that mid-July all-time high, and we corrected again. We broke below the 20-day moving average, but we are above the 50-day. And then again, when we look at our linear regression channel, again, similar story. We are at the -2 standard deviation under 20 days. But the interesting thing is, look at this. We are developing in a squeeze. And if we haven't had that, we go back to April. End of March and April, we've had that squeeze. So let's see what will develop from that. IWM or the Russell 2000, again, we had multiple resistance here. So that follows the other indices. And basically what we have is right around the 50-day moving average. We had just had found a support. The same thing, you're close to actually -1 standard deviation, but still under the 20-day moving average. And again, the momentum has flattened. When we look at the Dow, that was the weakest in last couple of weeks after hitting, again, all-time high and close to, it was October 18th, I believe. And what we see is there's been resistance. We are sitting right on that 50-day moving average. The same thing, we see that we hit the -2 standard deviation, but momentum has turned negative. So let's see again what happens to the slope. Now, this is what I want to pay attention. So I'm using the ETF, the Treasury Bond ETF. This is huge. I mean, there's been a sell-off. Exactly when we started that? When the Fed decided to reduce the rates by 50 basis points. And we have broken through quite a few supports, 20-day, 50-day, 200-day, our big support going back all the way to April, and still continuing the weakness. So what I wanted to do also, again, we see that from the linear regression channel, we are right in the midline. And what that tells us, this could continue. So we really want to watch this. What do they know? As a matter of fact, I want to look at what happened on, this is our 5-minute chart. And look what happened if Friday's employment number came. We had a nice jump. There was some bullishness, and then after that, it just had a big sell-off. So the markets, the rates have been just going down. I'm going up. The bonds are coming down. And look where we are. I'm looking at on a monthly, and this goes all the way to 1991 and 1992. This is, if you would have bought bonds, God, I'm going back all the way to 2004, you would have not made any money. So what the bonds are telling us, there's two things, regardless of who gets elected. So they're thinking, well, if Harris gets elected, quite a bit of spending. So obviously larger deficits. So they're reacting probably to that. But also, if Trump gets elected, well, tax cuts, still, again, would there be any deficit reduction? Again, the tax cuts would not help that unless they control their spending. So the interest rates and the bonds are jittery. So next week is important to see what's going to happen. Remember, we have all this debt, and within 3 years, we have the refinancing coming up. There are a few of those low interest rate some of the bonds are coming due. And again, we cannot really afford to have really high interest rates. So just a food for thought. Gold, nice slope, nice channel. We had hit the upper end of the channel. We have come down a little bit, but it's still positive. On the other hand, silver is more volatile again because of really it's industrial metal, but it has hit that the SLV hit that 32, and basically it has it has been pretty strong this year. It was one of the top asset classes. And then uh, crude oil, we had a nice bounce, and then we went above the 50-day, and we just couldn't hold and come back down. The same thing when we look at, again, the crude oil futures, we see we hit the upper edge. Look at what happened. The 2 standard deviation came down, hit the negative 2 standard deviation. Now we are right on the 20-day. We hit the midline, and the momentum is turning from negative to cautious, and but we'll see what happens with that. So the Bitcoin almost hit its all-time high, came very close, almost double top, got rejected, and basically, again, this has been a movement based on perhaps politically thinking that, you know, ex-President Trump could be more bullish because of his really 180-degree turnaround from 2016 attitude towards Bitcoin. So this is something that it has had a nice move in last few weeks. The dollar, just amazing strength, as you can see. So again, it's kind of a wait and see what happens in tandem with gold. Of course, we're looking at the UK with the rates, we're looking at the euro with rates, Canadian dollar or Canadian interest rates. So US has the upper hand on interest rates, again, interest rate parity. So dollar has been strong. On the other hand, we can see how euro, after a little bounce, still weak. The question is, will we go back and see eventually next couple of years a parity between dollar and euro? Just one stock I want to look at, Tesla. If you recall last week, you shared with the almost the double top, and we had broken above it, and then we got rejected. You know, the gap was here. We've had a sell-off, but we're still above the 20-day moving average. Momentum is positive, and we are in the midline. So we'll see if that's going to have this support, nice support, and come back, and eventually can we break this the high. All right, so let's talk about expected move. It's been just an amazing journey. On Thursday, S&P goes to the, again, the lower edge of expected. I mean, to the point. I mean, it was, and if you watch it on a minute by minute, it just hit it, bounced back. I mean, it just didn't go and stayed. And then Friday we bounced. And again, if you've been playing Iron Butterfly or Iron, Butterfly or Iron Butterfly, this is, it could even do a Condor. It's been a great play. Look at NASDAQ, the same story. Look how many times we hit it once, we did go outside, but how many weeks we've been within, right, that expected move. A tiny bit we did go outside, but we came back in. You look at Russell, right in the middle. No movement. We hit the upper edge, came back. We look at the Dow again, right in the middle. Even the bonds, they came close to the lower edge. We see gold actually did go hit the upper edge, got rejected. We had the all-time high gold and then came down. And the silver did hit the upper edge the week before. This week, we just hit the lower edge. I guess you can see, again, the common theme here. The same thing with XLF, the financials right in the middle. The energy hit the lower edge and stayed within. And then the crude oil, on the other hand, it's been all over, so pretty volatile. So that's a different story. We look at the Bitcoin, also did go outside, hit that again on a closing base. It actually hit the highs. Um, but we almost broke that, but then it came back and got rejected. But we'll see there's a lot of momentum for Bitcoin. NVIDIA, we're going to watch this NVIDIA again. The question about the enthusiasm about AI. I mean, definitely it's making a lot of money. We did go outside the expected move, but what did we do? We could have played in and out and came back and closed right inside. I'm looking like Apple after the earnings. So you've got to be careful on earnings weeks, not to be careful of these expected moves. So we actually went outside on the downside. Plantier, which has it has its earning coming up this week. As you know, my third objective goal was 46. We did hit 45.14. It's all-time high now. And then we came down, we are parked right on that lower edge of expected move. So we do have an earnings coming up. As far as Tesla, as I mentioned, we had a nice jump after the earnings last week. And then this week, actually, we went outside this the lower edge of expected move. Amazon had pretty nice earnings. It actually exceeded its upper edge of expected move to the positive. Meta, on the other hand, it had, again, the forecast was not promising, especially with their spending. So it closed, but still in the middle of its expected move. And Microsoft, the same thing, big disappointment again, the forecasting, although they both have beaten their numbers. But again, it's a lot of questions about the AI spending. So it closed outside its expected move. Okay, so let's work on what kind of a month October was. So as far as the month, the VIX was the big winner. Then we had lean hogs, palladium, orange juice, lumber, and gasoline, soybean, heating oil, canola, silver. We see a lot of commodities, and then obviously, S&P and a lot of indices were down. Year to date, we talked about cocoa in January, if you recall. Well, cocoa has been up 382%, orange juice is up 70, coffee is up 39, silver went down actually for the 12 months is up over 44%, gold is up. Again, a lot of commodities. When we look at the currencies, really the best performance obviously is Bitcoin. And then we have British pound yen, we have US yen, so a lot of yen cross currencies. And then we have British pound dollar. And of course, British pound actually did have a little sell-off yesterday. And dollar Swiss franc, but also dollar Canadian dollar is pretty strong. As far as the sectors, basically you can see all the sectors year to date, they're all positive. But for the month, they only had the consumer, communication services up, and financials up, and technology up. The rest, everything else was down. Some of them, like healthcare, over 4%. But as a whole, for year to date, we see that technology, communication services, financials, utilities, all above the 22% or 20%. But on the other hand, the basic materials and energy only up like 3%. As far as the best performing industries year to date, we see the utilities, independent power producers up about 132%, semiconductors up 72%, and again, another renewable utilities up 49%. The worst, on the other hand, is the pharmaceutical retailers like Walgreens and CVS and solar is down. Textile manufacturing is down. Oil and gas drilling and auto parts. As far as when we look at for the month, the best performing industry was airlines, silver, auto trucks, dealerships, travel services, and pharmaceutical retailers. As far as the worst ones, we had the textile manufacturing, marine shipping, solar, semiconductor equipment, materials, and mortgage finance. So let's talk about the individual stock, I'll talk about indices, the ETFs. So for the month, we can see all the ones in green, the brighter green, we see that crypto led, but also we had gold and silver up, VIX was up, and then the stocks tripled, and more of short of semiconductors, which if you shorted semiconductor, it would be up 9.85%. Everything else, was down for the month. S&P, Dow, NASDAQ was up 0.39% for the month. So there was, I think we broke the continuous up monthly, and that was one negative we had. As far as year to date, well, we see quite a few greens. The short indices, they are down. Short SOX was down big time year to date. You see the gold miners, semiconductors, gold and silver, China. These are some of the stories. As far as individual stocks in S&P 500 for the month, NVIDIA was a big winner, Google, and a little bit of Amazon, Walmart. But Apple, Microsoft, AMD, after its earning, had not a very pleasant return, and Eli Lilly, Verizon. So we see they were down. Year to date, NVIDIA by far is number one. And then we see Meta, Amazon, we see Broadcom, Oracle, big time. Microsoft is only up 8%. When we go globally for the month, we see that Taiwan Semiconductor was up. Other than that, we don't have a lot. I mean, IBM, which is the banking in India, up 2.67%. Toyota is down. Alibaba is down. JD.com, NetEase, and then AstraZeneca, we go back to not many positive, except SAP in Germany and Nucor in Cayman Islands, but the Canadian, quite few, Toronto Dominion, and we have energy stocks, they were down, in Latin America, a lot of things, banking in Brazil down. Year to date, there are a lot of green, as you can see, although Toyota is still down. Here, Taiwan Semiconductor is up 83%. As far as the best performing on S&P 500 year to date, we have VST up 224%, NVIDIA second, Palantir is up 142%, although it was down 5% or almost 5% for the week. But for the month, they were up almost 11%. As you know, it joined the S&P 500. And as far as the worst ones, we have Walgreens, Intel, Dollar Tree, Lauder, and Moderna. So they're big time down. I just want to, because it's end of the month, as you know, we do once a month, we do a stock of the month. So these were the two first months. We did the July we did June 20th and then July 25th. So these are the performance of the four stocks that we had followed. Bristol Myers actually did go above its $55, and we had projected that will be there in 2 years. So it's at $55.77, up almost 38%. Poet is up again. AI, Canadian company, 87%. Lulu, another Canadian company, is up 19%. And Twilio was a recommendation in July. Twilio was up, it's up 40% in about 3 months. So these are pretty good returns. our portfolio is up 46%. So we compare that the same time, the index is up 4%. So we're doing almost 10 times what they're doing. NASDAQ is really flat, S&P is up 4%, and Russell is about 9%. So we'll end this with our earnings, upcoming earnings. First of all, we look back, the week was the biggest week of our quarterly earnings. They were 390 positive, 443 negative. And I mean, price-wise, so it was a negative week. Reported though, also 436 positive earning reported, 253 negative. The forward guidance, there were 94 positive, 60 negative. You can see Intel was positive as far as the relative to earnings. So, but this is the disappointment was AMD, and it paid a price. It missed expectations. Amazon, it did beat, but also by far, actually, it was a great earnings. Meta beat it, but again, it was all about the forecast and the guidance. Microsoft had great numbers, but they also about the forecast. Apple also beat the expectation, but again, we're going back to AI side of things. Upcoming week, well, Monday, where that we have Palantir, we have Marriott, we have ADM, ARMS, and Qualcomm is coming up, AMC. So if you want to play the volatility, there's Open and the UPST. So there are a few. But the big one is Palantir coming up this coming week. So watch for that earnings. DraftKings, Qualcomm, they're both expected to beat. This one, Supermicro, there was obviously questions, internal problems. So you want to follow what's going to happen to SMC. It was SMCI. It was a big sell-off. Celsius expected to beat. ARM Holding also is expected to beat. Hims and Hers Health expected to beat. Cleveland Cliffs is reported in line. So I hope that was helpful. I appreciate, sorry, this was a little shorter than usual. But again, I don't want to miss this, although I'm away, because it is an important week coming up. So be prepared and stay well, and wish you a wonderful weekend and a great, great week ahead. Thank you.